Welcome back to the morning show here on Arise News. In a major policy call, the Central Bank of Nigeria yesterday moved to arrest the age-long practice of over-invoicing, which unscrupulous businesses have used to cut away the nation's forex, directing banks and other authorized dealers to desist from opening Forms M, whose payments are routed through a buying company, agent, or other third parties. In addition, the Central Bank announced the introduction of a product price verification mechanism, which is to help prevent overpricing or mispricing of imported goods and services. He said the move was part of his continued efforts to ensure prudent use of the scarce foreign exchange resources and eliminate incidences of over-invoicing, transfer pricing, double handling charges, and avoidable costs that are ultimately passed to the average Nigerian consumer. Joining us now to review these policy decisions is Johnson Chukwu, Managing Director and Chief Executive Officer, Cowry Asset Management Ltd. Chief Chukwu, welcome to the program. Good morning.
Good morning, Dr. Abasi.
Yes, I had to use your appropriate title. Chief Johnson Chukwu. Well, you already listened to my introduction. We'd like you to help us make sense of this policy that has now been announced by the Central Bank with regard to Form M and the role of third parties and agents. What's your assessment of this policy? Do you think it's a good development, or you think that it's coming rather too late, or it puts additional pressure on their businesses?
Well, interestingly, Ruben, for me, I'm looking at it from a different perspective, and that is the policy is symptomatic of a bigger problem. And my approach would be, let's solve that bigger problem. When you talk of over-invoicing, you are basically saying that people want to take out money from your economy from inappropriate routes or from illegal or illegitimate routes. Why would people want to take out money from the economy? The key thing why people over-invoice are two reasons. One, they cannot take out their money legitimately, so they look for an invoice, they ask for pro forma invoice, and then they mimic an import so that they can take out their money out of the economy. Or there's a window for round tripping. So those people now use those invoices, over-invoice, to take out the money into the out of the economy and bring back that money if there are multiple exchange rate environments in that economy. So we have to look at what is the underlying reason why people are over-invoicing. Previously, the concerns were that people were under-invoicing because they wanted to circumvent payment of customs duties. How did we suddenly move from under-invoicing, where people didn't want to pay duties, to over-invoicing, where they want to pay duties on goods that are not coming in, just because they want to take out the monies out of the economy, or they want to round-trip those funds and bring them back to the economy and sell them at a higher exchange rate. So the first thing for me is, how do I eliminate that incentive for people to over-invoice? And the way to eliminate it is that we must harmonize the exchange rate. If you harmonize the exchange rate, you eliminate that window for people to bring back over-invoice, pay duties on goods that didn't come in, and still enjoy a margin above the duties they've paid. And if you adjust the exchange rate and have a single exchange rate, you eliminate that prospect of one round trip into over-invoicing. The second aspect of it is that people who are over-invoicing may be because they want to take their monies out of your economy, or Nigerians who want to take their monies to other economies because they are concerned about the economic prospects. How do you eliminate that? For me, to eliminate that is that you must ensure that those who have legitimate reasons to access foreign exchange access it. Bloomberg reported about $2.5 billion of foreign portfolio investment investors' fund was trapped in the economy, and those people are struggling to take out their monies. There are also Nigerians who have their monies that have legitimate means to want to make payments outside the economy. They can't take out their money. So they are looking for illegitimate means to take out their monies. So for me, the key approach should be, how do I kill the snake? How do I kill the head of the snake and not the tail? And what you are seeing, people now over-invoice, because when you talk about over-invoice, you have to look at the implications. When you over-invoice for goods coming into the country, you pay duties on those goods, but you are not paying duties for the actual amount you are bringing in. So how are you going to absorb those extra duties on goods that didn't come in? It's only possible if you have to bring back that money into the economy at an exchange rate that is materially above the duty rate you have paid. Or you are so pressed to take out your money out of the economy. So for me, the central bank, yes, it's, for me, it's an ad hoc arrangement. I call it one of those panic buttons we are now beginning to press out of desperation to manage foreign reserve. But the key thing is that there are ways we can address this without going through this route. And those methods I'm thinking we should adopt are more enduring than enforcement.
So what are those methods? Because I hear you say, you know, structural flaws must be fixed because the market itself encourages the sharp practices. But now that we have this policy announced, how significant is this in blocking the leakage, if it does at all? And then what are those structural reforms you're talking about? Okay,
thank you, Adesua. The first structure I'm talking about is that if we eliminate the multiple exchange rates, the reason, let me give you a graphic illustration of what is going on. A customer comes in, goes to central bank, any of the central bank windows, buys funds at 380 naira to $1. He pays duty, let's assume it's a dutiable good. I want to believe that this over-invoicing will be coming mostly from goods that are not dutiable. Let's even assume it's a dutiable good, maybe the duty rate is 10%. The person pays duty of 10% on 380 naira. Okay, that's another 38 naira. So when he has that, he's now on something in the neighborhood of 410 naira. He brings in back this money into the economy and sells it at the parallel market fund at 490 naira. So for him, he has made about 80 naira for doing nothing, just gaming the system. Assuming there's no multiple exchange rate, which is, you say, what are those policy responses? And my first approach is that let's eliminate the multiple exchange rate. Let's harmonize the exchange rate in the single exchange rate. Assuming there's no multiple exchange rate, the guy pays duty on 10%, and even if he brings back that money, he loses 10% of his money. So he wouldn't adopt that approach. And that's why I say, look, two things that are driving people into over-invoice are, one, either there is an incentive to retrieve that fund into the economy and sell at a higher exchange rate, or these are people who wanted to legitimately take out their money out of the economy, but they cannot take it out through the official windows. And therefore, they are adopting illegal or illegitimate means to take out their monies. So if those who have need to take out their monies have access to the funds, if central bank can improve, I know it's actually a difficult thing for them because the reserve has dropped about $35 billion. But if they can improve, my approach is this. Take, for instance, the issue of foreign portfolio investors. Today, we are seeing very few inflow of foreign portfolio investment into the economy because the foreign portfolio investors who have sold their assets, their investments, cannot exit. So if they can't exit, those who wanted to come in would be worried, would be afraid of coming in. But my approach would have been, let's meet the demands of those who have sold their assets and want to exit. From Bloomberg, he said about $2.5 billion. If you take out $2.5 billion from what we have today, you still have about $3 billion. That will open up the Nigerian investment environment to those who want to come in, because there is nothing that scares anybody who wants to come into an economy higher than the risk that you will not be able to go out. So if you see people who are trapped, you won't want to come in. And if we meet the demands of those people who want to go out, then we could actually have more influence into the economy that will boost the supply of foreign exchange into the economy. So my approach is meet the demands of those who want to go out, so that you can free up the space for those who want to come in, as well as harmonize the exchange rate. Those are policy responses I would think we should do. Harmonize the exchange rate, eliminate the incentive for anybody to retrieve monies out of the economy. Like I mentioned earlier, previously our concern was greatly on under-invoicing, because Nigerians were under-invoicing their bills so that they will not pay the appropriate duty on those goods. And then what they were doing was they would buy funds from the official window at an amount that's not up to the value of the goods they're bringing, and they buy from the parallel market just to circumvent duty. But now, the reverse is now the case, where people are over-invoiced. So we must ask ourselves, what is the motivation of those who are over-invoicing? And once we address that, and my approach in managing economic issues, that a lot of times you find out that the appropriate policy response is more effective than enforcement.
Okay. It's obvious from what you're saying, people are getting incentives from this. I mean, who doesn't want to game the system and make a good deal out of all of this? But how easy or hard is it to collapse the window, the currency windows we have? Because that has been a balancing act now in Nigeria for a while now. How easy or hard is it? We're here at 371, but when you get on the parallel market, that's not the same. The parallel market as of today is a free-for-all. Last 2 weeks, 460, 470. Goodness me, you don't know when it's going to stop. How easy?
Well, Rufai, it's easy to the extent that once we recognize the implications of that and we're ready to live with those implications. Of course, every economic policy will have positive and negative implications. But what you look at, what are the near-term implications of a policy and what are the mid-term implications of a policy? We have moved the exchange rate from a $360 to naira to a dollar CBN window to 380 naira to a dollar, the official window. So if we can move 20 naira down the lane, we can as well adopt the investor and exporters window as the only window. And then all transactions are done at that window. If you do that, let me tell you, Rufai, one of the benefits is this. Foreign portfolio investors are worried coming into the economy, and these are their greatest concern. If I come in today at an exchange rate, let's assume, for instance, 380, and then because I know the 380 is not representative of the intrinsic value of the currency, local currency, and then let's even assume I invest in an instrument, a federal government bond, that gives me a 10% yield. And in 3 months to 6 months' time, the government decides to harmonize the exchange rate, and they harmonize somewhere around 450. If I have made 10 naira on 10% on 380, I will still lose when I convert the naira value of my investment back to dollar, because naira the exchange rate would have shifted to about 450. But if you allow that shift to take place, and then we have an exchange rate that mirrors the strength of our foreign exchange earnings vis-a-vis our imports, then foreign portfolio investors will be satisfied, will be at least at peace, knowing fully that even if the naira depreciates, it's not going to depreciate widely, and it's going to depreciate within a range that they can deal with. And you're going to see a lot more investment come into the economy.
But a lot of people are even skeptical about the value of the parallel market. They say that's not even the true representation of the strength of the naira now. That it's even worse than that.
No, I don't think so. The investors and exporters window, when the market was still vibrant, just before the COVID-19 crisis, was more representative of the market. I think the parallel market captures a lot of speculations. Speculation because people going to the parallel market maybe are not doing the legitimate business they can actually access from the official window, or cannot quickly get the money as soon as they need it. So if you improve liquidity in the official window, particularly the investor and exporters window, the parallel market will moderate southwards, will actually contract, the spread will contract. And we have seen this happen repeatedly. The parallel market in almost all instances, remember, is a black market in the sense of it. And you know that in every market, when products are driven to the black market, they are sold at a premium above their intrinsic value. So the parallel market embodies some level of premium that if we harmonize the exchange rate is not likely going to trade around the primary market rate.
Anyway, Johnson Chukwu, your point is very clear, and I hope the CBN and other stakeholders will listen to you. But let's move on to another topic. Yesterday, the MBS, Bureau of Statistics, announced the GDP figures for the second quarter 2020. And we're told that our GDP has contracted minus 6.1%. What are the implications? The Buhari Media Organization says, well, this is not a bad omen and that Nigeria is safe. But some other people are saying that, look, a full recession is imminent. A full-blown recession is imminent by the third quarter. Now, what does government need to do, particularly with regard to the fact that only two sectors did well in spite of that contraction, banking and the telcos? What do we need to do to prepare for recession or to stave it off, if possible?
Well, the first thing I would say is that to sidestep recession, it would be a difficult thing at this point in time. I will also say that what is happening in Nigeria is not just peculiar to our country. Virtually all the countries that published their second quarter GDP all reported negative GDP growth rate. We saw the global economy locked down for the greater part of the second quarter of this year. Our economy, Lagos was actually locked down on 31st of March, if you recall. Lagos, Abuja, and Augustine, we are supposed to have been locked down on 31st of March. And we saw a near complete lockdown of social and economic activities throughout the second quarter of this year. So the contraction we saw was most expected. There was nothing anybody could have done to avert that. But back to your second question, which is what do we need to do? The government the central bank has been trying to stimulate the economy. The central bank has come up with about more than 1.1 trillion naira intervention funds in the economy. The federal government, the fiscal side, has come up with what they call the economic sustainability plan, where they are projecting that they will inject about 2.3 trillion naira into the economy, and that if we achieve a 2.3 trillion naira injection into the economy will only contract by 0.59%, which I think is quite optimistic, given that the first half of this year, the economy has actually contracted by 2.18%. So what should the government do? I think the executive and the fiscal side of the government need to be more aggressive, like you have in other countries. What we have seen so far is that aggressiveness in trying to manage the economic implications of COVID-19 has largely come from the central bank or the monetary authorities. We need to see a lot of activity from the fiscal side. A couple of things that the fiscal authorities can do that will moderate the effect or the depth of the recession are there. If you look at the economic sustainability plan, they have made provision for what they call survival fund. The survival fund was supposed to be meant to support the small and medium-scale enterprises to continue to pay salaries of their employees during this economic downturn. Recall, Ruben, that the small and medium-scale enterprises employ 84% of the Nigerian workforce. So if you sustain their salary payments, that means you're going to sustain consumption. If you sustain consumption, you are going to sustain demand for goods and services, which will help moderate the contraction we're seeing in these sectors of the economy. And that's one aspect that the government can do. The second aspect, if you look at the second quarter GDP figures, construction industry contracted by 31%. And remember that government is dominant in the construction industry. We have a revised budget of 10.8 trillion naira. I expect the government need to be more aggressive in employing people in the construction sector. We need to be, remember a lot of countries have actually pulled themselves out of economic recession by going into public works, and therefore bringing people who were previously not in employment into the employment market, into the employment space, and making sure that they earn income. We need to stimulate demand from local funding sources, and that will largely come from either budgetary implementation or support to the most critical sector of the economy, which I refer to as the small and medium-scale enterprises.
Well, let's talk about the monetary side for a bit more. Yes, the policies have been swift and broad in response to the economic realities. Broad in the essence that they're covering, I mean, agriculture, households, pharmaceuticals, and a whole lot more. But what do you say to analysts that say this is only great in principle and not so much in access and disbursement, and that's where the problem is?
Well, at this way, I think I disagree with those people who are saying that. I operate in the real sector of the economy. I'm an economic analyst. I'm a financial advisor. And I have a couple of customers who have assessed some of these intervention funds. So the intervention funds are being assessed, but they are a drop in the auction. That's the best anybody could say. If people are saying they are not feeling the impact as much as they expect it to be, it is because the amount being disbursed is relatively inconsequential. Take, for instance, the $50 billion naira for the micro, small, and medium-scale enterprises. Do you know the number of micro, small-scale enterprises we have in the country? They actually contribute about 48% of the GDP of this country. So a $50 billion is a drop in the auction, but a few of them are getting it. So you need to look at what other countries are doing. What is the percentage of our intervention fund compared to our GDP? Countries are bringing about 10% of their GDP to intervene in the economy. Look at what South Africa is doing. Look at what countries like US, United Kingdom, and several other countries are doing. So the problem we have is that the amount we are intervening in the economy is so inconsequential given the size of our economy. It is not that it's not going there, but it's not having the pervasive impact it would have had if we have the capacity to put in a lot more money.
All right, it's so inconsequential. We all know that has been the debate. I mean, compared to what South Africa did, for instance, when you look at it to shore up the economy. But what will be the silver bullet in helping the close to 40 million SMEs in Nigeria today? Because the number keeps growing.
Well, I've always said this, Rufai. The first place is that I did mention their contribution to economic activity, the GDP, their contribution to employment. In terms of access to credit, total access to credit is less than 1% of total credit in the economy. I think it's about 0.7%. We need to provide more funding to them, and those funding must come at very friendly rates. The central bank has come up with the 50 billion. I did mention earlier that this 50 billion is just a drop in the auction. So we need to find creative ways to support them in terms of funding. Apart from other unhygiene factors that are impeding their success, such as availability of power supply, multiple taxation, bottlenecks in accessing government facilities or accessing or complex regulatory environment, we need to also address those non-hygiene factors that are constraining their development. But some of the greatest constraint they have is access to credit or access to funding. If we address that, we would have addressed maybe 20–30% of their constraint. And then I believe a lot more of them will have better success. If we can intervene in a subsector that accounts for 48% of our GDP, that employ 84% of people in in our labor market, then we are likely going to see, it may not be a silver bullet, but it would be something that will have some material impact on the economy.
Well, finally, Johnson Chukwu, just before we go, we'd like to have your thoughts on the second policy that was announced yesterday by the CBN, which is the deposit money bank-led collection of tariffs on behalf of the discos. Is this in the best interest of the discos, or this attempt to ring-fence and control the resources of the discos is an attempt to muzzle those discos? What are your thoughts?
My take is that it's one way the central bank wants to put some controls around the cash flow of the discos. As you may know, virtually all the discos are indebted to the deposit money banks. Most of those loans are non-performing or are delinquent. And the concerns have been that we've seen a lot of intervention funds go to the discos, going to the power distribution companies, and sometimes to the GENCOs. And we're not seeing any improvement in terms of capacity of the discos to distribute power. So revenues from the discos have not been increasing or are not being trapped in the system. And I believe the central bank is worried and may be thinking that there are leakages along their revenues flow. So the central bank is trying to make sure that they ring-fence the revenues of the discos so that we can at least eliminate those leakages, if there are leakages, and probably understand their cash flow, and that will also help to properly come up with the appropriate policies that will help support them. Because if there are leakages and the figure they're reporting as their revenue is not what they are actually earning, then it becomes you are throwing money at a wrong channel, and then you continue to see wastages.
Well, thank you very much, Johnson Chukwu, for joining us this morning on The Morning Show. Thank you very much indeed.